Hey everyone, it's Mike Burge from Nougat Team, and today on the market report for November 14th, we are going to talk about three different topics. Number one, talk about what is going on with the Fed raising the rate, how that affects interest rates. Number two, we're going to talk about foreclosures, what's going on with the market and how foreclosures affect that. And number three, we're going to talk about, is it really a good time to buy a home? So stay tuned. Here we go. Hey everyone, it's Mike Burge from the Nougat Team, and I am here with our Monday market report. Got a lot of things to talk about. Three really main topics that I want to get to today. Number one, I want to talk about mortgage rates. What's happened with the Fed? They raised just a week or so ago, they raised it 3/4 of a point. How does that affect the mortgage rates? What's going to go on with that? Secondly, I want to talk about foreclosures and what's going on with the foreclosure market so that you can see how that is going to be affecting what's going on here in the future. And then also, I want to talk about navigating the future market, which is it a good time to buy a house? And kind of answer some of those questions of a lot of people are having is it good time to buy a home? And what else should I be looking for? So I'm going to kind of go through all these different pieces for this week's market report. Remember, if you have any questions about this, feel free to reach out to me or the team, 844 Nuga Home, or hop over to our website, ChattanoogaRealEstateInfo.com, and you can search for homes, find out what your home value is, all that fun stuff over at the website, and also find some of our old market reports that you can flip through at your leisure. So let's get into this and talk a little bit about what's going on with the future market and what's going on with real estate. So number one, with inflation still running at a 40-year high, the Fed is expecting a few more rate increases to combat it. Mortgage rates will experience upward pressure through the end of 2022. So this comes from George Ritu from Realtor.com. And we are seeing the rates go up. Like I said, we just saw them go up 0.75%. Now, remember that Fed raising the rate doesn't necessarily directly affect the mortgage rates, but it does have an effect. So they're not raising the mortgage rates, but them by raising their basis points ends up affecting the mortgage rates and makes them continue to go up. So we need to continue to watch what's happening with this and how it's going up. The inflation has gotten pretty high right now, so they use that to combat, used by raising the rates to combat. So just something to keep an eye on. But what I want to get into now is foreclosures, and I keep hearing a lot of people talking about, oh, because the rates are going up and there's going to be a lot of foreclosures and because of inflation and everything going on. So I want to kind of talk about this subject and give you some facts about what's being said throughout the experts and see what we can come up with on what we think is going to happen with foreclosures. So first of all, Adam, they put together all of statistics on real estate. Here are some of the statistics we've seen over the 2021. We're going all the way back to 2005, and you can see that the rates of foreclosures have continued on a downward trend. So in 2010, at our peak, 2.9 million foreclosures, and then in 2021, we were down to just 151,000. Now, of course, we don't want anyone to go through foreclosure. It is a terrible process, but there always will be foreclosures, it seems, and it's just nice to see that less people are going through those issues. Now, with looking at the past as we continue through, and it's according to Adam data, only about 214,800 homeowners will be facing possible foreclosure in the second quarter of 2022. That's just 0.4% of the 58.2 million outstanding mortgages in the US. So just 0.4%. Again, I know it affects a lot of people, and we don't want anyone to go through this, but it is a very, very small amount. I know that people that hold mortgages in their portfolios, like funds and that hold mortgages in their portfolios, a 1% foreclosure rate is an acceptable loss for someone like that, and we happen to be only at 4/10 of 1% of it. So it's not a lot. And also, they continue on to say of those facing foreclosure, 195,400 or 91% of them at least have some equity build up in their home. And what that means is because they've got some equity build up in their home, that they have options. They do not have to be foreclosed on. They could actually just sell their house and collect some of the equity that they have in it. So there are options for those. So now we're only looking at 9% of the 4/10 of a percent that are actually really facing a stressful foreclosure, like we had seen back in the past in the 2009 era. So those upward prices of houses have helped a lot of people out through through the tougher times that we seem to be going through now. So I, I wouldn't really expect this flood of foreclosures coming in. So um, the U.S. foreclosure activity continues to increase quarterly, nearing pre-pandemic levels. These are some of the headlines that we're seeing. So just make sure that you understand that pre-pandemic foreclosure levels were not bad. They were very, very, very low. So like we just saw in the previous, let's see if I can flick back to that slide. Um, I'll flick back one more here. In pre-pandemic 2019, 2000, early 2020, you can see that the foreclosure rates still are very, very small. So don't let the headlines like that scare you. You know how we've always talked about on this Monday Market Report, how headlines are made to sell newspapers or magazines or whatever they are, and shocking headlines help do that. But if we look at the actual numbers, the pre-pandemic foreclosure numbers were normal. They were actually what we usually see in the market, and they were actually pretty low. So don't let those numbers scare you. So let's get back to the housing supply. It's always about supply and demand. So when we're talking about house prices, it is always driven by the supply of homes that we have, which the past couple of years, the supply of homes have been very, very low. And there has been a high demand to buy them. So therefore, the prices have shot up because there are more people that want to buy than there actually are homes available. Now, if we take a look at where we are in inventory in the week ending October 28th, and it takes us a couple weeks to get this data, so we're just making sure that giving you accurate data here. But the week ending October 28th, the same week in 2021, we have 39.5% more inventory. Okay. We were in a crazy market in 2021. There was very, very little inventory available. If we go back another year to 2020, in the same week in 2020, we only have about 6.3% more inventory than we had in 2020. And 2020 was also another crazy year of real estate where the prices were shooting up because the inventory was so low and there were people that wanted to buy. Now, if we go back to what we would consider a normal year, which was 2019, we actually have 37.2% less inventory on the market than we had in 2019. And 2019 was more of a normal market. So we still have historically low amounts of inventory. So therefore, I wouldn't look to see house prices plummeting because there still is a need. There still are a lot of inventory. There is not a lot of inventory out there, and we still have quite a few buyers. So I wouldn't look for plummeting house prices or anything. I would look more toward maintaining house prices and not see that dive. Now, this leads to some other discussions about buying. So we can start to work toward that. The ultimate question that a lot of people have is now the right time to buy a home? And I'm going to take you over to this quote. Um, let's get to the rent first. But you're either going to have to buy a home or you're going to have to rent a home. Okay. So you're going to have some type of housing some way. And if we watch what's happening in the rental market over the last many years, you can see how the prices of rent continues to skyrocket. It continues to shoot up. So you are going to be paying a good amount of money for housing if you need to have housing, and most of us do. So you're going to have that rental price there. And I don't want you to get stuck in where you have to be renting for the rest of your life. And that makes it very difficult when you get stuck in that renter's loop. If you get an opportunity to buy, that should be what you're trying to do, is to get out of that renter's loop, build up some equity, build up some net worth, because that's exactly what home ownership does. The majority of a lot of people's net worth is built into their home equity. So we want to get you out of that renter's loop and get you actually into a home. But with that, is it a good time to buy? So here was the quote I was talking about, and I can move my little icon out of the way so you can read it. If you can find a house that meets your financial expectations from a monthly payment and it is a good time for you to buy, then you should do that. So irregardless of what the mortgage rate is or anything else, or what the market looks like, if you can find a home that meets what you want to pay per month for housing and you love the home, you should go ahead and buy it. And I keep hearing the phrase, you rent the rate but buy the home, or marry the home. There you go. Marry the home and you date the rate. That was it. You date the rate and you marry the home. So if you find that home you like, you lock it up. And then as rates fall, as they historically have, which we'll talk about in a few minutes, later on, after inflation starts to even out, then you can refinance the home, get better rates, and you'll still have the home that you love. So again, if it meets your monthly payment, you love the house, you should go ahead and buy it. And if you wait for prices to fall, but they never do, you may discover the hard way that the house you found a year ago that you really loved, that you could afford, but you passed up on, is more expensive next year. So it just kind of lays out that if you find something you love and it fits your financial capabilities, then it's a good time. It's a good time for you, and um, I don't ever want to discourage anyone from getting their dream home. And if it fits you, then it's probably a good time. So in the absence of trustworthy, up-to-date information, real estate decisions are increasingly driven by fear, uncertainty, and doubt. These decisions can be hugely consequential for consumers and their businesses. Now, we've shown this clip a couple of times, this quote. I love this. The whole goal for me doing these Monday market reports is to give you the up-to-date information. We give you the graphs, the quotes from the experts in the field, and I want to make sure that you have all of the actual facts and information and not be scared about what the media is saying or what your friends are saying about what's going on in the market that isn't actually backed up by facts. So let's continue to bring you these Monday market reports, give you the facts on what is going on with the real estate market, and help you understand what's your possibilities. So with that in mind, remember, you can always reach out to us. You can reach us here at the Nougat team, 844 Nougat Home. ChattanoogaRealEstateInfo.com website where you can find all of our market reports. You can find all the houses that are on the market, find out what your house is worth if you have a home here locally. Feel free to reach out to us at any time. This also is being shown on our podcast, the Chattanooga Real Estate Report. You can find that anywhere, iTunes, Spotify, Stitcher, everywhere you can find podcasts, you can find our Chattanooga Real Estate Report. And then again, always on our YouTube channel, nougateamchannel.com will take you directly to YouTube, to our channel, so that you can see all of the latest information that we have for you. So I want to thank you again for tuning into the Monday Market Report, and I will look forward to seeing you next Monday.